So, you're dreaming of owning a home right here in the beautiful bluegrass state. But you feel like your credit score is just this giant roadblock, right? Well, you are in exactly the right place. Today, we're going to lay out the exact map you need to navigate the path to home ownership in Kentucky, even if you've got some credit challenges.
It's such a frustrating feeling, isn't it? You see that 3-digit number and you just think, well, there goes my dream. It's on hold forever. I'm telling you, so many Kentuckians feel stuck in that exact spot. But I'm here to tell you that a less than perfect score, it does not have to be the end of the story. Not even close.
All right, let's get into our game plan. We're going to walk through this whole thing together, step by step. First, we'll face the challenge head on. Then we're going to crack open a toolkit of loans that are available to you. After that, we'll talk about navigating some of those common financial hurdles, discover a really powerful local resource, and then finally, build your personal action plan.
Okay, first things first, let's be real. A low credit score is an obstacle. I mean, lenders see it as a higher risk, and it can feel like this huge barrier. But here's the thing you have to remember. It's an obstacle, not a solid wall. It's just a hurdle that you can and will get over.
And this is where the story really starts to change. You know, the US government gets that not everyone has perfect credit. So they've actually created these powerful government-backed loan programs that are specifically designed with way more flexible requirements to help people just like you get into a home.
So let's open up that toolkit. We're going to focus on 3 main government-backed loans that are honestly absolute game changers for so many buyers in Kentucky. We're talking about FHA, VA, and USDA loans. Think of these as your 3 main highways to getting the keys to your new front door.
This chart gives us a great bird's eye view. You can see right away, the FHA loan has fantastic flexibility with a really low down payment. But then, look at VA and USDA, a potential 0% down payment. That is a huge deal. Each one is kind of tailored to a different type of buyer, so let's break them down.
The FHA loan is probably the most common starting point. Basically, the federal government insures it, which gives lenders the confidence they need to approve loans for people with lower credit scores. It's one of the most popular programs out there for first-time homebuyers, and for good reason.
And this is where that FHA flexibility really shines. So check it out. With a score of 580 or higher, you could qualify with just 3.5% down. But even if your score is, say, between 500 and 579, homeownership is not off the table. You just need a 10% down payment. This tiered system is what makes it so incredibly accessible.
Yeah, let's just let that number sink in for a second. 0%. For eligible veterans and for buyers in certain rural areas, it is actually possible to buy a home with absolutely no money down. This, right here, can be the single biggest thing that makes homeownership a reality for someone.
For our veterans and active duty service members, the VA loan is just an incredible benefit you've earned. Not only is there no down payment, but you also get to skip something called private mortgage insurance, or PMI. That's this extra fee you usually have to pay on other loans, so avoiding it saves you money every single month. Now, the VA itself doesn't set a minimum score, but you'll find that most lenders are looking for a score around 580 or higher.
And then we have the USDA loan. This one is designed to help build up homeownership in rural and even some suburban communities. Just like the VA loan, it offers 100% financing, which means no down payment. The key things to remember here are that your income has to fall within certain limits, and the house itself has to be in a USDA-eligible area, which, by the way, is super easy to check online.
Okay, now let's talk about some of those bigger financial hurdles that you might be worried about. Like, what if you've had a major life event, like a bankruptcy? Or what if you just don't have a credit score at all? A lot of people think this is an automatic no, but that is just not true.
So really quick, there are 2 main types of personal bankruptcy. You've got Chapter 7, which is a liquidation. It basically wipes the slate clean on most of your debts. Then there's Chapter 13, which is more of a reorganization, where you create a plan to pay your debts back over a few years. Lenders do look at them a little differently.
So here's the crucial thing to know. After a bankruptcy, there is a waiting period, but it's not forever. This timeline shows you the standard waiting period after a Chapter 7 is discharged. And look at that. For FHA and VA loans, it's just 2 years. That's your time to rebuild and show lenders that you are back on solid ground. Now, what if you're what they call credit invisible? You know, you pay all your bills, but you don't really use credit cards. Well, you're not out of luck. Lenders can do something called manual underwriting,
where they'll actually look at your history of paying things like your rent, your utility bills, and your car insurance on time to prove that you're a reliable borrower. All right, we've covered the big federal programs. Now let's bring it home and talk about a powerful local resource right here in our state. This is an ally that can make a massive difference in actually being able to afford your first home in Kentucky.
I want you to meet the Kentucky Housing Corporation, or KHC. This is a state agency, and their entire mission, their whole reason for existing, is to help Kentuckians with affordable housing. They're not a direct lender, but they offer these amazing programs that work hand in hand with the loans we just talked about.
And here's why the KHC is such a big deal. They offer down payment assistance programs, you'll hear them called DAP. This can give you the actual cash you need for your down payment and closing costs. And the best part, you can pair this assistance with an FHA, VA, or USDA loan. Just know that KHC has its own set of rules, and they might require a slightly higher score, like a 620, to get their help.
Okay, you've got the map. You know about the tools. You've even met your local allies. Now it is time to talk about what you can do, starting today, to put yourself on the fastest possible path to getting approved. This is your action plan.
Here are 3 simple but super powerful steps. 1. Tackle your credit card balances. If you can get them below 30% of your total limit, that can give your score a surprisingly quick boost. 2. Make on-time payments your religion. It is the single biggest factor in your score. Just set up autopay on everything. And 3. Pull your free credit reports and look for errors. Getting a mistake removed can make a real difference.
Listen, this is so important. Do not just walk into any random bank. You want to find a mortgage lender or a broker who specializes in FHA, VA, or USDA loans and who actually has a track record of helping buyers with credit challenges. They'll know these programs inside and out, and they can actually guide you through the process. And if you ever start to feel discouraged, I want you to remember this quote. This is from a real Kentucky homebuyer, C. Belle Isle. She thought her credit would completely stop her, but just over a week after she reached out for help, she was signing a contract on her house. It is absolutely possible.
So there you have it. We've walked through the entire roadmap. You know the challenges, you've got the tools, and you have an action plan. The only thing left to do now is to take that very first step. So what's it going to be? What's your first step?